Hey, so I'm going to show you what I look for with my trade entries and kind of how I use the indicator for success. So right now I set this back to the default settings. So this is what you would see with Trend Tracker and Barometer by default. Barometer obviously is the kind of like the legend, if you will, for the whole indicator. Shows the overnight highs, regular trading hour highs, the opening price, yesterday's high, overnight low, regular trading hour lows, as well as the automatic fill levels and this no trade zone. It also highlights the overnight London session as well as the Asia session. All right, so that's pretty clear cut. That is the barometer. Trend tracker is really the more meat between the two. So trend tracker does a lot, but at its core, really what you're trying to use the trend tracker for is to track the trend, clearly, right? Like that's why it's called trend tracker, duh. But the real goal behind this is to use it both to track the trend and to track where the trend changes. And so the obvious goal behind that is to get the best entry at the beginning of the trend and to hold it for as long as possible, for as long as that trend continues. So what I am looking for typically is an entry along, I'm going to turn off super trend just to make the chart a little cleaner. I'm going to turn off major trend line just to keep the chart a little cleaner. And I'm going to change trendy cloud to from EMA cloud, which is this cloud right here behind the bars, to trigger fill, which essentially you'll see the change here in a moment. It fills behind the bars below the trigger line red and above the trigger line green. So for demonstration purposes, that's what I'm going to run with. So what I'm looking for here on a normal day are trend flips. So today was kind of a weird day with the news opening. So really what we're looking for, let's ignore this news opening. Let's look at the pre-market. Looking at it on the 5-minute on the right, 2-minute on the left. What I base literally 100% of my entries on is this blue line right here, which is the 65 EMA, which I've called the trigger line. So the trigger line basically is exactly what it sounds like. It triggers the moves both for me and for a lot of the consolidation in the market. You'll notice that there's a lot of chop alongside of it a lot of the time, and then there's a lot of moves that originate from it. The idea behind it being is that when you have a trend moving upwards or downwards, so like here for example, you can tell for many reasons. One, the bars are being printed green. Let me bring you actually back here in live time so you can see it as if we were there. So you can see the bars are green, everything in these boxes are green, the trendy cloud is green, the major trend is green, the MACD is green. The MACD is strong on the 2-minute. We got an RSI that's bullish. We got a super trend that's bullish. So what you were looking for, obviously, was an entry somewhere along this blue line. You could have taken a trade anywhere around here with and granted this is after hours, so you could have a little bit more of a smaller stop. Let's say a 10-point stop. Targeting, let's say 30 points. Boom, that hits. What you'll notice is the next time that you can also enter here at this retest. You could have entered anywhere along this first line. What you do not want to do, my own personal suggestion, is you do not want to enter here. You do not want to enter on this first candle because you don't know, and I don't know, and we don't know if this is a reversal for an entry or if it is something like this. If it's just a retest to move back down further, a retest here, a retest here, a slight reversal here. So this is where everything coming into confluence really matters, right? You want to see green, 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 green. You want to see a green on the 2025 super trend lines, and then, only then, so not here, not here, not here, because even if this bar started, it would not have been in the green, it would have still been red. After this happens, you want to wait. You want to get back along this blue trend line, and then you want to set your entry. You can do a limit order, you can do a market order, you can do it however you want. I recommend limit orders, personally, just out of experience. And then you just want to hold. You can do it for a nice round point. You can hold to the next field level up. You can try and see if you're going to get the moon move and go for 92 points. You know, that part's your discretion, right? Like you can use these other tools over here to see how far the trend's going to go. You can keep track of the trend with the trend cloud. See now here, obviously this one's a huge obvious candle. But if it had not been a huge death candle like that, anything basically that touches the bottom of the cloud over here on the 5-minute tells you your trend is getting weak again. So again, that's a little bit too much, but when I am holding, most days I will hold for one fib level, which in this case is 48 to 50 points. So I'm going to close the replay. That's one way that I trade. I'm going to give you a little bit of an overview of how this whole thing works. Mainly the bar coloring, because I know that's the main question that most people have. So by default, let me turn on the super trend line so you can see what I'm talking about. Okay, so you can see these two sets of green lines, these two sets of red lines, and occasionally a red line and a green line. Excuse me. By default, they're set to aggressive. Aggressive takes into account these things like the trend cloud, MACD, the major trend line, RSI, things like that. And if they're all mostly in agreement, then it paints the bar green. If they are not in agreement, then it paints the bar red. If there is a downward push, even if it's a single bar long, it will paint it red on the aggressive setting. Even if it's counter trend, you can see here, there's green bars, even though this is counter trend, there's green bars here, and there's red bars here, even though it's counter trend. That is aggressive. That is built that way intentionally. If you want to see a potential reversal, if you want to see more what is actually truly happening with the raw trend, aggressive is what you want. That's what I trade on. But you just have to be very conscious of not trying to long here, not trying to long here, just because everything's green. You're like, oh, this is it. This is the reversal that I'm waiting for. This is the V recovery. No, we don't do it. Like, if you are going to have that kind of temptation, you need to change it over to cautious. Cautious is the exact same calculations as everything here, except it will not allow anything that is counter to this bigger super trend line. So as you can see here, there's no counter trend highlighted here. It won't allow it. Red move down, red move down, red move down, red move down, green move up, nothing, 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 red move down, nothing, green move up. Right? It's pretty straightforward. That is the quote unquote cautious way. Turn that on if you feel like the aggressive is going to be too tempting for you to try and take a long here or to try and take a short here. We're not trying to do that. That is not my style of trading. If that's your style of trading, this isn't going to work out for you. The third option is super trend, which is kind of a combination of what I just described, minus the MACD, minus the RSI, minus the trendy cloud. It literally only uses these super trend lines. And I don't recommend it because it's not clean for entry. It can be useful for the bold. So the idea of what you would do are called super trend flips. You're in a downtrend here, though, because there's a pullback, you don't know what's going to happen. But what you do is essentially you set a limit order right here along the super trend line, and you just kind of have to wait. You set your stop somewhere in the range of something generous, but eventually it would break below the trend flip. It would flip the trend and it would continue to go back down, either to your next fib level or 40 for 100 points. Again, I don't recommend trading like that. Some people who do like to trade super trend flips, I've got a couple buddies who enjoy trading that way, so I built that for them. My main style first is this blue trigger line right here. Are going to be something like this, or something like this. Typically use 11, 15, up to the next fib level. This to me, phenomenal trade. This right here to me, phenomenal trade. Because if you look at it at 15 points, you're talking about a 7R here. One 5R. Between the two of them, 186 points. Quick math on that. 186 points times one NQ contract, you're talking about $3,700 a count. I don't know your size trading, but I trade 5 accounts, 1 contract each. So you're talking about more than 15K in 2 trades. That's why I trade the way I do. Less is more. So I hope this is helpful. Main, again, this is to not trade against the trend. You want to only trade with the trend, and you want to use your interest. You can see here would have been another perfect example. Start to trend down, start to trend down. You take your entry anywhere along that blue line, and with a 15-point stop, you're golden. Anywhere along that blue line, hold down to the next fib level, boom, another 115 points. You're a bold person, you got 170. You know, like it goes on and on. Here's the reverse. 15 points up, I bet, or 15-point stop rather. Actually, this one you might get stopped. Yeah, this one you would get stopped. But the move is there. So I hope this is helpful. I know this is kind of high level and kind of a quick overview. Let me know if there's any specific. Happy to go over anything with you one-on-one and answer any questions you've got. The only other thing I can stress is that if any of this is too noisy or just too much on the chart, you can turn off literally everything. You can even turn off the bar coloring. The one thing I would not recommend turning off is the trigger line and the forecast window. So you could trade old school, if you will, keeping this forecast window in mind, you know, because this is like the guiding light, if you will, to keep the trend in. If you don't want any bar coloring, turn it off. If you don't want any super trend, turn it off. But all I can tell you is they are useful tools, and they will keep you out of the. So, again, hope this has been helpful. I don't know if there's anything else I can do to help. Cheers.